Welcome, everyone. Thank you so much for the really, really kind words. So this is the agenda that I set up for this discussion today. So a little bit about myself first. So background, software engineer, studied at IT Delhi, came to the US, worked as a software engineer for many years. But for the last couple of decades, I've been an entrepreneur. The first question I'd ask you is, what are you afraid of? Can I have somebody volunteer their thoughts, please?
I would say, will I have enough money for retirement?
Sure. So that's a very good question. Will I run out of money before I die, right? What other questions do you have? What are the concerns? Because ultimately we're driven by our emotions more than anything else. And fear is a very, very powerful emotion. And so some of the common things I hear about is, will I run out of money? As Shala just said, will I be able to retire? Will I leave something behind for my family and my life? And will my family be able to manage it if something bad happens to me? Those are all really important questions that we need to kind of think about and answer. But before we go there, let me ask a different question. So clearly, all of these questions, in principle, you can answer by saying, yes, I can do it as long as I have enough money. So how do you make money? So let's say win the lottery. What happens? So another question, does winning the lottery make you happy? Any guesses, any thoughts?
Yes and no.
All right, elaborate, please.
Yes, because yes, you have a lot of money, but then sometime if you never had that money, you may get nervous breakdown and you don't know how to handle that part of money.
Very good point. So it turns out that the researchers that have studied this, and I will put a link in the chat in just a minute. So they studied happiness level of people. And like any other good study, they basically divide people into two groups, the lottery winners, the not lottery winners, and they measure the happiness level. And it turns out that winning a lottery only leads to a very, very short-term increase in happiness. And within 1 year, the lottery winners, their level of happiness gets back to the same level as the people that never won the lottery. So think about this: with the lottery, which you think of as this massive, you'll always be happy. It doesn't really create happiness or financial security or that notion of well-being for more than 1 year. So clearly winning the lottery, good as it may sound, is not the answer, right? So I'm just putting the link in the chat. So that's the study if you want to take a further look. Right. So the other thing also is that for most of us, when you think of what it means to be financially well off, the surveys have shown to put that threshold at roughly 2 to 3 times their current wealth. And this basically ends up being a never-ending journey. We make $100, you think $300 will make you happy. Make 300, the number goes up to 1,000, and it just keeps going and going up. And so ultimately, the way I think about it is that what matters more is the relationship to money and how you perceive it, how you think about it. And I think, as Naseem said, one of the key things is whether what you're doing is not necessarily what you're earning more, whether what you're spending is within the limits of what you have. And that's actually far more important than anything else. But probably the more important thing is that you have to think about money, not just in terms of what it does for you, but also what it does for loved ones. And I think Shala started talking about that. So is what happens if something bad happens to you? Will your family members be in a good place? Will they be taken care of? Will they have good record keeping so that they can actually get access to the money that they will need to carry on with their lives? And this happens in the other direction also, and it's sometimes culturally considered insensitive to think about it, but you also have to think about what happens if your partner, something bad happens to your partner. Will you be able to take care of things? Will you know enough to know where the records are? Will you know how to talk to the financial advisor? And for all of this stuff, my belief is it's better to plan and to make work. And the more you plan, the less worry you have to do when the time comes. So essentially, at some level, you have to spend your brain power one way or the other, and you're much better off spending the brain power by planning ahead instead of worrying about money. And in some sense, the best measure of financial wellness is how much time and effort you spend worrying about money versus planning. So that's at least my personal belief. And with that said, I can walk through at least what my personal choices are. And so it's my belief that what you do in almost every aspect of life, and definitely when it comes to finances, it has to match with how you think, what your personality is, and how you react to different things. So in my case, there's a strong sense of loss aversion. And also the second thing that's important for me is I don't want to spend too much time worrying about learning new stuff just for the sake of the finances. Now, I do believe it's important to plan, and there's some things that I enjoy, and I do spend a lot of time and effort on that. But for the most part, I would rather not have to think about the money or worry about, for example, let's say if I have some stock and that company performs poorly and their kind of stock price falls down, then I know that that would stress me out a lot. So what I have decided to do as a matter of kind of protecting myself against that is I don't invest in individual stocks. Second thing is the time horizon. So a time horizon also dictates what choices you can make. And in particular, if you have a short time horizon, then by definition, you have to take choices that are less risky and that are more liquid. And the kind of assets we talk about, like our cash, our bonds, and those kinds of instruments that can be liquidated quickly and that are not as high risk, although their average rewards also returns tend to be lower. And the third aspect of my decision making is I'm also limited by what I know and what I can kind of want to learn about. And this will come more when you talk about this. For example, real estate is a really, really good place for a lot of people. A lot of people have invested very successfully in real estate. I think it's good, but it requires you to spend a lot of time and effort in understanding what it takes to be a successful real estate investor. And it's my belief that in any market, you have dabblers and you have the people who are truly, truly working hard or truly, truly investing. And the people who are putting in the effort, they will in general do far better than people who are dabbling. So I'm putting my money into something, then I don't want to dabble. Then it's something that I want to really, really understand and really, really get into. And then only then should I be investing my money. Otherwise, I'm likely to lose to the people who are putting in more of the effort. So that's kind of part of my philosophy. So as a result of that, what I've done, so the top three lines show the factors that go into my decision making. The next three are the items that I basically have personally invested in. And so for most of it, it's basically fairly boring. But in my mind, boring is all good because I don't have time. I don't want to spend too much time managing this part. Now, if on the other hand, your personality is such that you enjoy doing this, you like doing this, then go ahead, work with the new stocks, work with the new stuff that makes sense to you. So, but for that as background, so my own personal thing is mostly index funds. Simple, straightforward, low expense ratio, keep the money, forget about it, and then let it grow on its own. Second is a small subset of target retirement funds, kind of similar in behavior to index funds for the most part, mostly passively managed. And so that's that part. And the third is something that I personally like a lot, and I have not seen too many people do. So I call startup indices. So essentially, I come from the startup world. And so the reality is that the venture capital world, the returns have tended to be significantly higher than the returns of public markets. And the good thing is that the venture capital market, which is traditionally closed off individual investors, is actually a lot more accessible now. But what happens is, like anything else, you have risk and reward go hand in hand. So individual startups tend to be extremely risky. And I don't believe people should be investing in individual startups unless you have the time and the effort and inclination to do the homework needed to do well there. The reality is that the vast majority of startups fail and they lose the investor money, the pitch itself. It's a very popular vehicle for a large number of startups. And they have their own essentially index fund equivalents that you can invest in. And that's also another thing that I personally have been very happy with. So that's the third thing. Now, the bottom three lines are three other areas that I believe can be the right fit for a large number of users, a large number of people, but not for me, primarily because of what I like and what I'm interested in working on, and also what I know. So as one data point, crypto, I think is fascinating. It has potential to be massive, but I do believe that you need to do your homework, and I have not done it, and I'm not interested enough to do it, so that's a straight away. Similar thing for real estate. The third is life insurance and annuities. I think they make a lot of sense for a lot of people. But it's a question of who you are, what life stage you are at, what you're counting on. So especially if you are somewhat younger person who has many, say, multiple decades of working like ahead of you, then I do believe life insurance makes a ton of sense to protect your family. But on the other hand, if you are basically retired or retiring, then I believe that life insurance is not quite as meaningful. So depending on your life circumstances, you may decide to choose it or not to choose it. Similar annuities make a lot of sense for people that just want to have the peace of mind of knowing a particular revenue stream is going to come back. But my general dislike of annuities is that the rate of returns tends to be low. And so I would rather not do that. I'd rather just buy a separate life insurance and separately invest money into an index fund and get a much better return out of it. But that's just my own personal feeling. And if you prefer to simplify everything, then annuities are great for that too. Make sense so far? Okay, I'm not getting any feedback, so I'll assume we'll come to that in Q&A section. So the next point is that something to keep in mind. So are people familiar with the story from Leo Tolstoy called How Much Land Does a Man Need? So this was one of the stories that we learned growing up in school, and always kind of to the back of mind. And the basic story for the people that haven't heard it is that there's this person who gets this really great deal from a community, from a tribe, where they say, look, you just have to basically run around from sundown to sunset. And if you can complete a rectangle, then whatever is within that rectangle, whatever the area that you complete, all that land will be yours for one single fixed price. But if you don't complete the circle or the square or whatever shape you're doing, then you get nothing and you lose your money. So this guy starts at sundown, runs and he gets greedy and he tries to run harder and harder, trying to cover more and more area. The net is that he basically gets sick, he falls down, and he essentially falls just short of getting the mark. And in the end, he gets buried by the people. And the moral of the story is that in the end, he just needed 6 feet of land. That's all he needed, because that's what he's going to retire on. So ultimately, the reality is that we all have essentially only a finite amount of time in this world. And we can do far better instead of focusing on how much wealth we can accumulate, to focus on what we can do to help the world, to make things better in the world, to leave the world a better place, knowing that we'll go out the same way we came in without any of the money that we make in the process. So that's kind of my final thought on this.